We've got a little bit of a different market update today. Yes, we're going to go over the numbers that are relevant today. We pulled these numbers off of the Calgary Real Estate Board's website today, but we're also going to go over a few slides from the Calgary Real Estate Board market forecast. Every January, the Calgary Real Estate Board forecasts out what they believe is going to happen through the whole year, so 2023. We're going to go over some numbers, and it's very, very interesting when you look at the Calgary market as compared to other markets across Canada. You'll really get a lot out of that. But that's going to happen right after we go over these numbers. But what we're going to show you right now is a snapshot of what's happening in the market today. So you can see in these numbers that sales are definitely down over years past. January was down over January of 2022, 40%. And February so far, it's only been 7 days, but it's down 46%. Now, this is the volume of sales. And if you look at the average price, January was down about 0.75%. But in February so far, the average price is down over 11% as compared to February in 2022. Now, we can attribute these figures to a lot of the people are shifting to the lower end segments of the market because the interest rate rises over the last year have sort of kicked them down a notch. So whereas before they could qualify for a $450,000 home, now with the new interest rates, they can only qualify for a $450,000 home. So that's why we're seeing the average price decline.
Yeah, Tim, and just one thing on that so everyone can understand these numbers here. Where it says active listings, CREB actually puts in the pending listings. So it says 2,605. We're actually 1,934 active listings right now in Calgary. And out of that 1,900, about 800 of them are townhouses and condos, or condos in total. So there's only 1,100 houses across the board. And it's a bit, Tim, when you look at this minus 11%, it might sound really good, but that bottom end of the market, and Tim, what price range? That would be up to 400,000, right? Roughly.
Yeah.
That is what's really moving. And that market is actually going up 10% right now. So you have to really understand what's going on in the market. And as Tim said, with affordability, I mean, Danielle's coming on to do a whole presentation shortly, but with interest rates going up, we have to be really careful where we're spending our money or how much we're spending on these properties, because it's only going to yield so much rent to cover all of your costs and cash flow. So it's becoming a little bit more and more difficult, especially with condos, because condos have condo fees that eat into the majority of your costs or your overhead. So you have to be careful on what you're buying these days. And you're going to continue to see condos, half duplexes, just keep up rising with the market.
Yeah, and one more thing you're going to see with this tightening supply in the market today is rental rates are going to go up. Now, we'll get into it more when we look at CREB's forecast and see the amount of people that are coming into the city and into Alberta from other parts of the country and other countries around the world. But we've got this influx of population, and we've got a declining inventory in houses for sale. We've also got a declining inventory in the number of rentals out there. So what it means for the existing landlords is everybody can bump their rents up a little bit. And what it means for people getting into the market, yeah, you're paying a little bit higher of a mortgage amount, your costs are a little higher, but the rental rates are also a little higher and cover that spread. So as long as you work your numbers out before you make your purchase, and you make sure that that property that you're buying is cash flowing, you're going to be okay. We'll dive into the CREB market right away here, if I can get this thing to change. So as I said before, the Calgary Real Estate Board does a forecast every January for the whole year upcoming. It's for 2023 this year. It's very interesting the way they look at it and the way they project things out. The first thing we're going to look at is prices. And if you read the newspaper these days, you're hearing about, oh, the Canadian market's going through this huge price correction. And you know what? In places it is. If you look at the prices in Toronto and Vancouver, Toronto's price from 2014 to 2022 more than doubled. And the same, well, Vancouver's almost doubled. But if you look at Calgary's market increase over that same time period, we went from 438 to 516. We haven't even gone up $100,000 in average price in that 8 years. If you look at the little chart up top here, you can see the market activity year over year change, let me just move this down here, of the markets across Canada, the large markets across Canada. And you can see that Calgary's market is still in the positive, but every other large market in Canada is in the negative. So we're seeing that across Canada, that market correction, but we're not seeing it in Calgary. And to a very small extent, we're seeing it in Edmonton. But Edmonton, I think, is going to follow along what we've seen in Calgary as the year progresses. We're only a month or so into it. So we're going to see the trend continue in the larger centers like Vancouver and Toronto, but in the Western centers like Calgary and Edmonton, we're probably going to see we predict a slight price increase throughout the year, don't we, Azad?
Yeah, so we've actually ran these numbers daily. This is what we basically live for. And we've always felt that our city, Calgary, is undervalued. And where should it roughly be? We've always said it should be roughly around the $650,000 range. We don't know when it's going to get there, but we've done a whole video on why you should invest in Calgary in 2023. And Tim and I go through every sector. We go through every sector describing why Calgary is going to finally get there. And it's probably going to happen within the next 3 to 5 years, which is very, very exciting for us.
Yeah. So moving on to the next slide, we look at GDP growth across the country, and Alberta is projected to lead the whole country. And you can see that Saskatchewan and Manitoba are also right behind in leading in GDP growth. So we're actually positioned very, very well to have our housing market not go down. So the big housing correction newspaper articles and the fear mongering from the newspapers, we're not going to see that in Alberta because our GDP is very, very strong. And why is that? Resources. All the Western provinces are in the same boat. Our current federal government may want us to transition to green energy by next week. But if you're being realistic, it's going to take many, many years. And over those years, we're going to need lots and lots of oil and gas. So we're positioned in a great place to keep our GDP growing and growing and growing. And that trickles down to the average little property owner like me and you. And we can charge maximum rent because we're going to attract more workers, we're going to attract more immigration, and they're going to go into good paying jobs, so they'll be able to pay higher rental rate. So moving on to the next one is employment growth. Again, Calgary's forecasted employment growth is very, very high. It's like 7.67%, the highest in Alberta, of any region in Alberta, sorry. So Calgary being the head office city, the more of the white collar city as compared to, say, Edmonton or Red Deer, we're going to attract more employment growth because these bigger companies and these service companies and even tech companies that are moving in here, they need to attract skilled workers. And the skilled workers necessarily have higher wages. So with this employment growth rate, again, that trickles down to the real estate investors who need to fill their properties with tenants. And we're going to have a great supply of them because it's going to be very little unemployment and quite a few new employees coming into town. Okay, moving on to the next one. This one we've been talking about probably for 2 years now at that. The number of people that are coming into Alberta from not only our own provinces, but from out of the country. So if you look at, the employment drain, the people drain from, the various provinces, large amounts of people are coming from Ontario, Manitoba, BC, and moving to Alberta. Why? Because we have the jobs, right? And our housing is more affordable. You saw a couple slides ago, the average prices in Toronto and in Vancouver. As you can tell the story about the client we bought a house for in Okotoks. He moved to Hamilton.
Yeah, he was a policeman out in Ontario, and it just makes sense. He could make the exact same money here. His house went up through the roof in Ontario. He sold it, basically paid for his beautiful home down in Okotoks, paid almost cash for the whole thing. and he has 2 young kids that now get to have a great life, and they've got friends here. So it's not like they're starting all over. They've been to Calgary, or Calgary, Okotoks area. They know what it's like here, and how good it would be for their families. And the word's getting out there. You could just see by the numbers here. And if you're driving around town, just keep an eye on the number plates. You'll see a lot of BC plates and Ontario plates, and we're in a really healthy stage. And Tim and I have been doing this long enough. As Tim said, we've been doing it for over 15 years. We've gone through the dark days. So we know when you're going through the dark days, there's no cranes in the sky. There's nothing getting built. There's too many properties for rent. And it's the total opposite right now. It's so healthy to invest in Calgary right now.
So the final slide we're going to look at is the summary that came out of the forecast. Now, when I look at this summary, I find it, super, super positive leading into the next year. First of all, we'll go what Krev is predicting, this top little part of the chart here. They're predicting just a very, very slight decrease in residential sales. Now, the last 2 years, 2021 and 2022, have been very, very high sales records, high sales volume. So 2021 was basically a record. Over 27,000 properties changed hands. 2022 actually was more, with 29,000 properties changing hands, and now dipping down to only 25,000 as predicted to happen in 2023. Well, that's way more than the years prior to 2021. So we're still in a very, very good position with high sales volume. Residential price growth, again, they're predicting it to be basically flat at minus 0.58. Azad and I think we might even see an increase over the year once people start trending back into the higher price properties. We may see that average residential price growth be more than flat and actually be in positive territory by the end of the year. That remains to be seen. You can see the different price levels for the different property types. Detached homes, semi-detached homes, row homes, and apartments. You can see the increases and decreases predicted there. The second part of the chart down there is predictions from different levels of government or banking. RBC Economics is predicting Alberta's GDP growth to be almost 2%. Calgary's GDP growth is predicted to be around 3.2% by the Conference Board of Canada. And you can read the numbers all the way down, and they're all in the positive. So all of the projections for Calgary's economy next year are very, very positive. And we're very, very positive about the rental market as well. And for our rental property investors out there, we're predicting quite a bit of positivity out there, whether it's getting your property rented for more, buying a better rental property, disposing of one that's a problem to upgrade into a better one. We're very, very positive about the upcoming market. And what we don't like to see is all these negative newspaper articles. But we just have to take all that with a grain of salt, because they're usually talking Canada-wide. If we're talking about the Alberta market, all you have to do is look at some of these numbers here, and it's very, very positive. The one last thing I want to talk about, maybe Danielle will touch on this on the bottom, is the Bank of Canada's overnight target rate of 4.25%. Will we see that increase or decrease throughout the year? We might. But we figure it's going to be around there. It might go up a quarter point and down a quarter point throughout 2023. But we're predicting it to stay around that point for at least 2023. And then in 2024, rates are going to start to come down again. So people in variable mortgage rates, you're going to start to see your payments come down, most likely at the end of this year, and most probably in 2024. Anything to add on this, Azad?
No, that's pretty much straight up. And once again, if anyone wants to get our full in-depth reasoning on why Calgary is going to do so good going forward, in the chat there is a link there. You can press that and it will take you to the video why invest in Calgary in 2023, and it's pretty much eye-opening on why you should invest in Calgary.
Okay, so that's our market report.